This is episode 101 of Standing Out. Standing Out is a remarkable interview style podcast with the intention to highlight women and men making outstanding contributions in their field. Today, I'd like to welcome Jason Henrichs. Jason is the founder of FinTech Forge, a managed service provider helping financial institutions transform in the era of digital disruption, and co-host of Breaking Banks, the world's largest FinTech podcast. He's also the co-founder and chairman of FinTEx, a nonprofit growing in FinTech clusters across the Midwest, and currency of FinTech Center of Excellence in partnership with the University of Chicago, Northwestern and DePaul University. Jason is a frequent speaker on financial innovation, regulation, compliance as a competitive advantage, the importance of diversity, and the potential for technology to drive financial inclusion. He's on the FinTech advisory boards for the City of Chicago, the AARP, the Center for Financial Services Innovation Lab, and the South by Southwest Accelerator. Jason, thanks for being here.
I need to shorten my bio. I'm sorry. That was a mouthful.
So as I read these bios, I'm like, dang, how do you fit it all in? Is question one.
Well, maybe the better question is my mother and my mother-in-law and even my closest friends still don't understand what I do, which is why the bio seems to have grown. In fact, if you ask many of them, like I haven't been employed since sometime in the early 2000s. So,
oh my God, my family thinks the same of me. They're like, what do you do again? And they're like, you seem to be doing okay.
You do things. It's funny you bring that up because since we're talking about entrepreneurs, and so my last W-2 was in 2003, and it had some spots in between there, and we had just come back from a scuba diving vacation, my wife and I, and we were with my in-laws, and I made the comment, oh, I don't have any cash. And this was several years ago before they understood, meaning I literally did not have cash to pay for the coat check. And love my father-in-law takes me aside. He goes, are you guys doing okay? Can I loan you some money? I looked at him like, what are you talking about? He goes, well, I know you haven't had a job for a really long time.
That's awesome.
Yes. Welcome to entrepreneurship.
There's highs and lows. So let's start way back. How'd you get involved in the financial space?
So I am a mechanical engineer by training, a fluidics engineer to be exact. And
finance makes sense.
Yeah, finance totally makes sense. And my first job as an engineer was working for Deluxe Corporation, the check printer. Okay. And if you ever want to know how all of those pieces of paper get into the bottom of the box of checks, I'm happy to tell you how I spent 2 years of my life. It's a wonder I was single in that era. But originally I was supposed to be doing a lot of printing, and they were looking at how do we actually use micro printing on checks for security. And then this is the very early 90s, and a major consultancy told them, oh, the internet's happening, and in 2 more years no more checks are going to be printed. And so I ended up being this plant consolidation engineer, figuring out how do you get all sorts of stuff shoved into the bottom of a box of checks and automate it. So I eventually wanted out and went to work for Michael Porter's consultancy in Boston. They're like, financial services. And I was like, I will gnaw off my left arm to not have to do anything in manufacturing. So I'm like, oh yeah, I know a lot about financial services. I mean, I know checks go in boxes, boxes contain checks. What else do I need to know?
And then people deposit them, voila.
Voila. And so that was 1997. And almost everything else I've touched since then, and I know it's weird that these two things go together. It's either fluids running in small spaces, also known as, fluidics, or things that sell into financial services with a much greater emphasis, probably about 70% is financial services. In the angel investing my wife and I do together, we do have things that are not financial services related, and some of them involve fluids in small spaces, largely in the medical space.
Oh, that's interesting. So tell us about FinTech, the nonprofit.
So one of the things that was interesting, so in 2008, Dan O'Malley and I co-founded PerkStreet, which was one of the first challenger banks in the world, right? This idea of, a bank that is online only and was going to disrupt the system and what it was doing. And then we realized, wow, starting a bank in the middle of the financial crisis was a horrible, horrible idea. FinTech was not a hot space. I love this story. A pretty famous Silicon Valley VC looked at us and said, FinTech, does that have to do with fish? And he thought he was just so hilarious because it was not part of the common vernacular.
Right.
And, so out of necessity, we started banding together with other financial technology entrepreneurs in Boston, Providence, and New York, and developed, a good amount of community. And a lot of that gave birth to things like the Boston FinTech Meetup. We had a small group called the Financial Entrepreneur Working Group, which was the closed door, basically keep each other from jumping off of tall buildings, navigating this. And so fast forward to end of 2013, moved to Chicago, where, my wife and I both being from the Midwest, I just assumed since there was so much financial services that there'd be plenty of financial technology. And sure enough, there was lots of FinTech, but there wasn't much of a community around it. Now, you can find the Startup Chicago as a great early stage technology community, and it has 2 central hubs, 1871 and TechNexus, that's run by ITA. Like, that's where you can go find the startups, but you don't find the large financial service players, there. In what started as kind of a joke that I'd met with Rumi Morales, who at the time was leading CME Ventures, and I was going to go meet up with the folks from Pangea Payments, and she hadn't met them before. And I'm like, oh, we're meeting at this bar across from their office that does $2 tacos, because the way to my heart is tacos. And I jokingly called it FinTech Taco, thinking, hey, she was going to tag along because she hadn't met them. And people loved it so much that it became a regular occurrence that the first Tuesday of the month, we were showing up for FinTech Taco. The next thing you know, when you're not busy enough, you suddenly are running a 501c6 industry association going, how did this happen? I was just buying tacos.
Isn't that right? It's so amazing how when you look back, it's like, oh, well, I see how the dots connected now. But in the moment, it's like, wait, what just happened?
Yep.
Well, I think when most people think of FinTech, they immediately go to like cryptocurrency. Now, I know there's many other innovations in this space. So like what is happening? Like, what might we just general consumers not really realize right now?
Yeah. And, that's a more recent thing. And maybe that assertion will go away since Bitcoin is going back to, some of its dramatic lows. But certainly last year, that was what brought it to the tip of everyone's tongue. I knew that when
pause on that, because I know Bitcoin's seen some pretty dramatic declines. Like, why is that happening?
Well, I think it's a little bit because it saw such a dramatic rise. Like, I knew that we were in a bit of a bubble when unsolicited, without Lyft drivers knowing what I did for a living. This was starting at Thanksgiving, right after Thanksgiving. So my belief is everyone spent all of Thanksgiving talking about cryptocurrency. And I got in and Lyft drivers going, what do you think of Bitcoin? It's like, what? But first let's define fintechs. I find that's one of the squishy terms that gets thrown around, that if not cryptocurrency, people just assume fintech equals startup. And I think that even the Wikipedia definition isn't very good. So I like to define it. If you think of what used to be defined as financial services, there was a layer called the customer. Then there was a service layer, and behind also known as a human, a branch, or a call center. And behind that was technology. And you didn't actually have the customer, whether a consumer or a business, interacting with what actually conducted the transaction, right? You had that service layer. And when you flip that and you say, what if the technology goes straight to the customer? A lot of dramatic things happen. The number one thing is you create a bunch of efficiencies, and that can be applied in many different ways. It can allow you to create new products. It can allow you to enter different markets. It can allow you to change pricing, right? Changing pricing can mean you can serve customers that never before could have gotten that. Look at, people know before people associated fintech with crypto, they probably thought robo-advisor, like Betterment, Wealthfront, right? Think about, they were building a personalized mutual fund that just meets Katrina's exact specifications on your risk reward profile, your time horizon, and the amount you can invest in doing it at low cost. Now, if you were part of the 1% before, you could get that put together, but not a mass market. And
Right.
the only way you can do it is it's all technology led. And so when we talk about fintech, we're really talking about the gains that come from efficiency of applying technology without a manual service layer.
And so, like, examples of those might be like Betterment is likely an example of that.
Betterment's a
What
great example of that.
are examples?
Acorns is a saving
Oh,
app, is very popular. Venmo is, a
yeah,
fintech company.
yeah.
Square is, no
Oh,
longer a startup, which is
that's
like, I
Flickr.
like to bring it up, right? Is, think if you had ever signed up for a credit card account in order to, as a merchant, accept credit cards, it used to be a very manual process where you showed up and you met with an ISO reseller. They
Mhm.
collected a whole bunch of paperwork. They gave you the big bulky terminal that you needed to plug into a landline. And
Oh
Square
my
said, no, we can take this little one by one dongle. We can do it all online. And now tens of hundreds of thousands of merchants that before wouldn't have qualified or known they could even get an account because it was cost prohibitive, Square said, nope, we can allow card acceptance for you.
You know what I love about that is like we have a Square reader for our kids' lemonade stand. I see Girl Scouts selling cookies all the time with their their mom's Square reader. Like,
Well,
I-
think about it. That's a perfect example, and I'm going to use that, by the way. I will give you
yeah,
credit. I will give you and the kids credit for that. But think about in the old day, back to this efficiency and what
yeah,
allowing technology to lead it and that efficiency it creates. There's no merchant acquiring ISO, which is the independent seller, that would show up at your door and say, do your kids have a lemonade stand? What do you think their monthly purchases are? With this minimum purchase amount, if they are doing at least $10,000 a month in volume, they can qualify for this rate. You're not going to sign up. You're like, kids, get out of the house. You need to be
no.
pimping that lemonade.
20
Um,
bucks is a
but
great day. Like,
yeah, but Square makes that possible because they apply technology.
that's awesome. As we wrap up, I'd love to know, like, as an entrepreneur, how did you align yourself with universities like DePaul and Northwestern to get that program going?
Great question. So I'm a nerd at heart, which my wife often reminds me. And when we were in Boston, we partnered quite a bit with a number of the financial leaning institutions, which Harvard and MIT both had large financial plays. But then on the entrepreneurial side, found there were some great programs at places like Northeastern and others, and said, education, it's great on the academic side, but it also needs to be practical in its application. And we need greater connectivity between industry and the academic world. And academic being both research and students to better prepare students for the future. And what was exciting in working with University of Chicago, Northwestern, and DePaul, and now Loyola and Bradley and a number of others, as we're expanding, is just even bringing them together and creating that community and the connectivity with industry has yielded a bunch of very exciting
That's
results.
awesome. Yeah, that's great. Well, I love ending on yielded a bunch of exciting results. Like,
Yeah.
well, and I think the point on that is get out there and keep exploring opportunities. Sometimes you don't really know until you get one and you're like, oh, well, all these universities need the same thing, and look how many universities there are. So
Yep.
I think that's awesome. Jason, thanks for being here. I appreciate it.
Great to be here. Thanks for having me.
You're welcome.